In this video, guys, we're going to look at how you calculate your position size in different Forex pairs and account currencies. Stay tuned. Hey traders, warm welcome to you. Okay, so I have to confess, as a UK citizen, we have the luxury of being able to trade spread betting, and trading spread betting has lots of good benefits, one of which I didn't even really consider until you kind of think about how other ways people trade FX and make it a little bit more complicated. When you're trading currency, when you're trading with a spread bet, it's literally quoted in £1 per point, £2 per point. That's your position size. You know that for every pip it moves, that's how much you make or lose. If you trade £5 per point, it's £5 per pip equivalent. For every pip it moves up and you're long, you make 5. For every pip moves down and you're long, you lose 5, and vice versa. Really simple to work out. Your account balance is in GBP, your profit and loss is in GBP, all very simple. However, if you're trading in a different Forex account, let's say you are trading in US dollars and you're trading something like Euro GBP and you haven't got the luxury of being able to spread bet, how do you calculate the profit and loss? Well, there's a few steps you've got to take, 4 steps really. The first of all is you've got to determine the risk in the actual currency of the account that your account balance is in. So in this example, let's say you've got a USD account and you want to trade Euro GBP. So first of all, you need to determine the risk, and that's just going to be based on your account balance and how much you're prepared to risk. So let's say you've got a $50,000 account and you want to risk 1% on the trade, $500. That's going to be different, obviously, depending on your risk management strategy. Then we need to convert that risk into GBP. So that's the first step. That's the second step. We just now go to the GBP USD quote and we look and we see it's 1.75. So we just convert that $500 into 1.75. In other words, how many pounds do we get for our $500? In this case, it's £285, 71p. So that's our risk that we want to risk in pounds. It's the same as $500 risk. Now we need to convert that pounds into pips because we're trading Euro GBP. So what we do is we go along here and we say, okay, 285.71 divided by the number of pips that we want to risk. Now remember, guys, when we are trading a setup or a strategy, we don't want to curve fit too much. We need to go, hey, where's the risk? Okay, it's going to be, I need to have 50 pip stop or a 200 pip stop. We don't want to risk monetary amount. We want to look at the actual physical risk in pips and then convert that based on the value of amount we're prepared to lose, not the other way around. So let's say, for example, we're going to swing trade this and we've got a 200 pip risk. What we would be looking for is 1.4 pounds per pip. So we're going to divide 285.71 by 200 and that gives us 1.4 pounds per pip risk. So if we were spread betting, that's what we would do. We'd risk 1.4 pounds and we'd know that we'd lose, okay, we're going to lose 285 pounds 71p, which is about $500. But we don't have to do that because we're spread betting. So if we're just trading it this way, this is how we've got to do it. So now we know the position size per pip. So we now have to calculate the overall position size that we can put into our ticket and trade. So we know it's 1.4 pounds per pip is the maximum we're allowed. We multiply that by the number of units in the mini account that we're trading, equals 4, which is 10,000, equals 14,000 units of Euro GBP. So what does that mean? That basically means that you can trade 1 mini lot. If you go to 2 mini lots, you're trading too much. If you go to 1 mini lot, you're trading too little. What do? If you've got a broker that allows you to put in 14,000 units, that's going to be your trading position size. That will ensure that for 200 pips movement against you, you don't lose more than $500. Now, of course, if the exchange rate between GBP USD shifts between now and then, you're going to be slightly different, but it's close enough. You know that you're in the right kind of ballpark. You know the position size is 14,000 units and a 200 pip risk is going to be about $500. So you're not going to suddenly surprise yourself with a $5,000 risk or a $100 risk. And that's how you calculate your risk or your reward, or all the kind of things that you need to do when your account is in a different currency compared to the base currency or compared to the actual currencies of the pair that you want to trade. All right, guys, see you next one. Take care. Bye-bye.